Hello and welcome as we're entering into the 23rd day of June 2021. My name is Derek and this is the Money Charts channel. All bets, trades, and of the like, each his own risk and their own reward. Currently 11:01 p.m. Eastern. And the 22nd day, and there's been a lot of things I haven't been doing recently and I haven't been making too many videos. In fact, it's now been probably a couple of weeks or so since I've made a video. But along that time, not much has been happening. So, what hasn't been happening, I haven't been buying silver because I did that when price action was up here. And I do feel there's going to be times again where it's going to be, oh my goodness, crypto prices are getting out of hand. And I mean, the value of my portfolio is yada yada high. I'm in good position. I think I have no choice, and it's a smart move. And why wouldn't I buy? Of course, probably gold and silver along the way. I was going to say gold and or silver, but I'd take that or out because it would be an and. Anyway, on to the charts. I drew these lines in a long time ago. Well, the 33,000 change area has now hit for a fourth time, piercing extra. This one deeper than the previous three. Doing so after price action on the 14th of June managed to get above the 18 average of highs after consolidating for quite some time, attempting to break out, microscopically getting above the May 26th and 27th highs. And oftentimes from a failed move in one side, you can get a fast concise move in the opposite direction. You really got to think that has been the case so far. This is a daily chart. We take a look at this on other time frames. 4-hour term. Not much really to say about this in here as well, I guess you can see it's starting to leave the 18 here and this around in here. And we resisted it in here, resisting it again. And if it can hold and stay above 31,000 and change for a good portion of the day, that will at least make this 18 average flatten out, which has now been in decline mode for the better part of, or pretty much the entire part of this last week or 7 days. Single hour term time frame, there we have a situation of interesting spots here. Especially when you also only when I basically, but not only, but mainly, especially when I throw this line in as it is. And before I get into it, I really want to go over the fact that it really did look like in here on June the 8th that it was going to be breaking down. So I was kind of surprised as if it was that it did what it did here on the 14th and 15th. As I do, I mean, especially now, expect this price to go down to 20,000. But if that doesn't happen, because it even looks more so now, of course, on the move from the last few days, that's going to be the case because this looks like a successful sell pattern, quote unquote. Thus, this was just a failed move amongst the trend of point A high to whatever this point B low happens to be, which I'm thinking is going to be next key fib mark. If it does, it doesn't. However, again, when we look at this on the hourly, we resist the highs here at 6 o'clock in the morning, and even somewhat here, whatever. But most certainly here at the start of the 22nd day. Then it comes down, and then what's interesting is it didn't resist between 31.3 and 32.2 where it came from, which was the previous support level. Rather, it came and resisted this previous high here, and then doing so by having like 4 or 5 or so periods, and now breaking out above it on the 20-hour stamp. So, it's interesting. Is this a possibility of a failed breakdown? It's just a possibility. It's got a long, long, long ways to go. But if it's able to continue a rally from here, especially hold any moves within the 18 or any 61, like holding over 30, and then breaking above this point, I'd be kind of wondering, especially because oftentimes when I think of a good setup in play, if it doesn't go through and it really does look like it's going to 20, you can usually expect a fast move in the opposite direction. As far as the more longer term is concerned, the price action has started to see this 18 average barely starting to decline, but it still remains in this very low volatile, just hanging in there amongst this line. Yeah, it's broken down below it, but it still hasn't. It's still holding and staying above this line, at least for now. And the monthly chart is in an uptrend. It's still near the higher end of this 18 average. It encountered a down month of about 35%. And that's after month after month after month going higher, breaking out from like 12,000. It's pretty much near triple that number now. And it is most certainly triple from that key 11,000 level where it broke out from. 18 average of lows coincides within the key Fibonacci level as well, coinciding within previous high of about 20,000. Now, as far as the altcoins, they've been very volatile and a lot have been going down a lot too. Here's Dogecoin against Bitcoin, which managed to get up, surprisingly to me, to noticeably north of 1,000. And I'm even thinking 626 is a little bit of a surprise, at least looking back at when the thing traded in a range between like 20 and 100 for the most part for years and years and years. On the daily term, having a significant down move of 28%, breaking down below this key area of support of around 750 up to about 800 and change. And not much of a rebound, but we'll see what happens from this point forward in the sense of it's somewhat of a key low. I guess it could go lower too. Maybe you could say it probably should. As far as this goes, I don't think that this run is over for cryptos. And yeah, maybe this thing goes down to here or whatever, but I think these things will continue to have its up moves and its down moves moving forward for at least a decent amount of period. Now, what happens will happen, but I'm pretty darn near confident that this is, as I expected, all these moves going lower, something that these coins have always been doing and you would expect them to do. Moving on to Tezos, and overall, these coins have had a lot of down moves for a good portion of them anyway against the Bitcoin because Bitcoin has done very, very well. Now, Tezos is in a spot where we have all these up and down choppy moves, and they're not as big anymore, but we can even see that. So I think it's just a key note. If you look up, down, well, there's a whole bunch of them in here, but this isn't for all market. This wasn't much here, but you go up and down in here, but up and down move here on like this timestamp. Even a little bit here I'm just saying they have a lot of these moves. These 1, 2, 3, 4 of them, I guess you could say, in the August or this little period up here. Then up move, up move, up move. Doing a lot of up and down choppy action, meaning you can get periods where you just chop away. Those things will give you good small gains, and then things will always change. That's the key point because, well, from August the 10th from this period to under this period, price action pretty much went straight down from 3,800 Satoshi down to, or 3,800 handle, 38,000 really, down to about 600, with really not much of these up and down moves that I was talking about, if hardly any at all. And then there's going to be a time, and I can almost guarantee you that it's going to attempt something like this, but actually succeed, where it gets above the 18 average of highs and it just goes haywire. And maybe this will make new lows before it does, maybe it won't. Meaning this might go and lose 3 or 4x from here, maybe go down to 1, 200, 300 handle from basically where it stands now. Let's see. Theta has been kicking ass recently. It's in at 20,750 Satoshi against the Bitcoin. And when it had these moves, everything going down like this, it did so too. But it remains to stay in this sideways consolidation. I've been at the retest of the 27,000 area high. And supporting several times at around 18,000. And it's been just a magnificent run, Theta Fuel as well. That'll be it for the cryptos. Let's move on to precious metals. First, that of gold, $1,782 against the fiat US dollar. And hanging in there within this previous level of resistance. So when you look at this, it rallied up to near 2,000. And then it supported 1538. It then came back and resisted where we stand now at 1782. So if it can hold in that area, what I'd like to do is, well, what would the range be? Well, exactly previous high, which was 1920. And the low of a little, like, betweening this low and this high. So pretty much somewhere around 1688, which is exactly what it has done so far. Is hold and stay in that area. There's going to come a time where this thing will just go sky fly high. It is. What I do recommend is Mike Maloney on the Gold Silver channel on YouTube. He's got a lot of good reasons why gold is going to go well north in the 5-figure point, which something I believe is going to occur. Short term along the way, this thing hasn't been doing much at all, as we can see here. For the last, it got up to this area. This is, 2020, May, June last year. So over a year in this sideways consolidation. It rallied up to this high in August last year. So it's not that far away. Just a couple of months from where it is. Or that's how long the correction has been, about 10 months. Of course, silver in the same vote as well. So we look at things like kilo, key high. So far, kilo, which is higher than this one. This key high, lower than this. This key low, higher than this. And then within such, we can see, okay, so what do we do from here? This is almost a lower high to this and all these others. These are certainly higher lows to this in a bull market. Making a higher low and then rallying up. We're all talking symmetrical stuff, higher lows, lower highs. So until it can either start to show weakness like around the low 1700 area, it's like one of those who knows deals. And it really has to start to break away above these highs and really get north of 1900 in low change. And then you can start to be very enthusiastic about the possible situation on a bullish level. Let's go to silver. And a lot of it, the same thing, just hanging in there in this more tighter sideways consolidation. As these lows that are established between 22 high change to 21 high change hasn't been retested. It supported later between, well, this Fibonacci mark at 24, or I'll say 24, to about 24 high change, 24.85. And it's at 26 now. So it's a whole range of different areas. You got this, 24, maybe it does hit 23. And if it breaks below this, then it's just a little bit more of a move down to like the 20 area. And you gotta think, at least I do, that if it's gonna come down and break this 3-hit time hit level of support well pierced north of the last fib level, that it's gonna significantly break it and thus have a move down to, well, around here, I think, 20 even. It's just a psychological number as well. Another thing of note with charts is when you're in a sideways consolidation range, and it's a big one. One of the ways one's big is because it's been in there for a long time, which has most certainly been the case here. When you break it, expect usually fast, concise moves to the area you break it from. So you break it north of like 30, 34, 35, 38, pretty damn fast. That's just how it goes. It is what it is. And in a situation here, you break this at like 22. Next thing you know, it's like 20 in like that day. 10% or within 2 days. And then from there, we'll see how the $20 test would be from that point on. And in conclusion, the gold to silver ratio in at around 68.5 has no signs yet of showing that this downtrend is over. When it's in a downtrend, that means silver is overperforming that of gold. And as you can see in the sideways range over the past 10 months, how silver's been doing just that, and gold's been pretty much in a lower high, lower low, shorter term bear market, you might be able to say. But in such, when the periods at the start of the year occurred, it happened from before. We came down to this key fib market 74, and then we had a decent sized individual period rally that was only it for the rally, and then it grinded for 2 periods with 2 small reds, and then this period like December, January, and here that's a statement. Okay, yep, this is no longer the support. I'd be looking for this level for resistance. It has only been resistance in one way, and that's on the breakdown level. It hasn't been there yet if it's going to be on the rebound, meaning breakdown on this period here. You can see on January that it has the line above this. That means you go down below it, you come up to it and fall. We'll see that better on the shorter term. And then when you do that, you're probably, and it did, have a decent move below this established support. And then again, now I'm looking at this level for resistance. It hasn't been that. But if it does rally up, I'd be expecting around the 75 area to be resistance, which of course would coincide within the newly declining 18 amongst this longer term monthly time frame. And on the daily term, there's the resistance that we can, what was I looking at before for? The fact that it was resistance on 74 in January. That's what I wanted to look at. So let me look at weekly. Okay, where's January here? Yep, so you can see in here, this is what I'm looking for. So the price action has this move in here that pretty much supports it. It resisted it really, but it held and stayed above it for this move. But there wasn't much of a move. So now we see the weakness amongst the 18 average of lows in here at the end of last year, start of this, and that's where we resisted it. So we've resisted it, came down on this move. If we have any break above the 18 highs on here, yeah, I'd be expecting a good chance that this would be a high. Of course, market will do what it does. It's just when you think about stuff like this and you're trying to use charts in any way to have positive equity, one form or another. Well, one way of looking at this is, maybe I can find strategies where if you're betting it, I'm going to be looking to sell a market when it comes up to this level, and then do things later on if you're right and it goes down, or if you want to short the market one way or another. That's something that you might end up doing. And at the same point, if this thing comes down to this fib level, let's say 53.85, you see it like 51, 52% extra, then maybe this is a case where you would buy a market like this, or if you're trading the gold to silver ratio, maybe you would sell silver for gold. If you were shorting before, this is where you would cover your shorts. Just different strategies. Find what works for yourself. But when you start to see that things can become so predictable, well, you can take advantage of it relatively strategically easily, if you know what I mean. That will be the conclusion of this video. Thank you for tuning in. Have yourself a great day. Bye-bye.